The past week in Bitcoin was kind of quiet, but we're going to dig into some data and talk about some of the main storylines to understand why exactly are we just chopping sideways. Don't forget that these weekly update videos are brought to you by FTX. You can click on the link in the description to learn more. Let's jump right in and start to look at what exactly is going on with the data in the Bitcoin market. First, we can see that Bitcoin trading just above $20,000. If we go ahead and we take a look at the network and the health of it, you see that the Bitcoin market cap is below $400 billion. The inflation rate still fixed at 1.76%, and more than 90% of all Bitcoin is already in circulation. The real exchange trading volume over the last 24 hours is sitting just below $7 billion, and the miners have been paid just over $19 million in the last 24 hours to continue to secure the Bitcoin blockchain. GBTC now trading at a 30% discount, and Bitcoin down about 70% from its all-time high of $69,000 back in November of 2021. If we compare Bitcoin, gold, and the S&P 500, Bitcoin is down 56% from a year ago. Gold down 3% and the S&P 500 down 8%. But over a 2 to 10 year time frame, Bitcoin continues to outcompete those other assets. Bitcoin's price closing history shows that Bitcoin has only traded above this point for 590 days, meaning that 88% of the time, if you bought Bitcoin and held till today, you would be in the money. Bitcoin compared to gold, S&P 500, NASDAQ, and TLT saying the exact same story it's been saying over the last few weeks. The compound annual growth rate sitting at 113%, which is quite impressive compared to those other assets. And the Sharpe ratio coming in at 0.84, meaning that if you add Bitcoin to a portfolio, it has incredibly positive impact. Now, the big story over the last week was definitely the Federal Reserve. The United States Central Bank continues to talk about quantitative tightening. They continue to try to aggressively raise interest rates, and they have a mission to destroy demand. Now, as we have seen since November of last year, every single trader, everyone on Wall Street, they were putting Bitcoin in the risk asset bucket. As they saw the Federal Reserve start to talk tough about destroying demand and increasing the financial conditions in a tighter way, they started to sell those risk assets, and Bitcoin suffered along with all other assets as well. Now we see the Federal Reserve, which has raised those interest rates at an aggressive pace, still dealing with persistently high inflation. Just yesterday, in the Federal Reserve press conference from Jackson Hole, we saw Jerome Powell talk about a very hawkish view. Regardless of whether you think that Jerome Powell and his crew actually have the stomach to continue to create tighter financial conditions or not, one thing is true: the Federal Reserve is in control, and it's all one big trade right now. Now, if we go and we look at international markets, we can see that in places like Estonia that already have 20+% inflation, and we now have predictions of double-digit inflation coming to the UK and many other markets, it is very obvious that individuals are going to look around and try to find store of value assets that can hold out in these high inflationary environments. Usually those assets will be something with a fixed supply or something that cannot just be created out of thin air. Real estate, precious metals, and things like Bitcoin all come to mind. Now, of course, Bitcoin's price is just going sideways. It has now for a number of weeks. One argument is that's a positive, is that simply Bitcoin is just not responding to any of the persistently high inflation, and it's also not responding to the tighter financial conditions that they continue to try to create here in the United States. Another argument is that in this environment, some people thought Bitcoin would explode upwards. But really, my view is that Bitcoin is simply moving towards a correlation closer and closer to 1 with other assets. And you see this across the market. Real estate coming down, Bitcoin coming down, stocks coming down. This is what happens when the Federal Reserve destroys demand. That demand is on the consumer side in an effort to get inflation down. But it also is from investor appetite as well. There is no ability from the Federal Reserve to create a difference between investor appetite and consumer appetite. It's either we have a big appetite or we don't as a society. And if the Federal Reserve is going to destroy consumer demand, they're going to destroy that investor demand as well. That's exactly what we've seen. And so whether people like it or not, there's not much to analyze around Bitcoin itself. It's all about the Federal Reserve. Will they pivot or will they not? That is the trillion-dollar question. Based on the press conference yesterday, it looks like Jerome Powell, he's still pretty hawkish, and he remains committed, trying to be Paul Volcker back from the 1970s. My guess is they can't really destroy that much more demand, and so at some point over the next 6 to 12 months, they will pivot. When that pivot occurs, Bitcoin and other assets will likely benefit from the tailwind caused by injecting more liquidity into a market. What that means is that you need a hedgehog. Just hold on. Don't get liquidated. Don't make any dumb decisions. As the timeless financial principle, we're trying not to look stupid. Comes from Charlie Munger and Warren Buffett. If you can successfully avoid being dumb right now and simply holding for the long term, it'll likely prove to be a pretty smart decision. I hope that these weekly updates are helpful to you. It makes me really stop and think more about Bitcoin, the market, and where exactly we are. Unfortunately, all eyes remain on the Federal Reserve. That's just a sign of the times. These weekly updates are brought to you by FTX. If you're interested in buying Bitcoin or cryptocurrencies, you can go there. They're usually pretty cheap fees, sometimes as much as 85% cheaper than their competitors. They also have introduced digital stock trading, which means that you can buy stocks in the same place you buy your cryptocurrencies. On top of that, they have no transaction fees and no payment for order flow for those stock orders. So it gives you better pricing. Go check them out today by clicking on the link in the description. FTX and FTX US continue to innovate in financial markets. I'm glad they're sponsoring these weekly updates. That's it for this week. I hope these are helpful, and I'll see you guys again next Saturday.